week. It is the 9th of October, 2023. Don't forget, download the Vox Markets app. It's free, but the value is immeasurable. You know what, Johnny? Have a nice weekend.
Yeah, right, Tom. Busy.
Yeah. God, I took my son to like a football trials thing, you know. All the it's a nightmare. All the parents there got quite competitive, aren't they?
Very competitive. I remember it well.
Talking about competing. Tenuous link there. But I've seen Labour are really pushing on the economic front. They're saying that they will do everything. Growth, apparently, is Keir Starmer's #1 target mission to get the country growing. So I have put a title there. Just in the comments, please, like, subscribe, and all that stuff, if you could as well. But who do you think would be better for the economy? Because that's what it's all about, isn't it? Really, it's the economy, stupid. Whenever the economy does well, everything else can do well, you know, because you've got more taxes coming in. You can pay for, national health. You can pay for education, all that stuff. So who do you think would do better, Labour or Conservatives? All you need to put down in there. That's all you need to comment. If you want to give a reason, let us know. But do you believe what they're saying, John? Do you believe Labour will be good for the economy or better? In fact, it's not good for the economy. It's better than the Conservatives, I suppose.
Well, it can't really be worse, can they? I mean, the problem they'll have is that they'll have their hands tied behind their back by, the very parlous state of the UK finances. There isn't a lot of wiggle room to get stuff done. So yeah, I mean, Rachel Reid was speaking this morning. I think she's correct. I mean, the focus of the government should be on, making it easier to build infrastructure, prioritising economic growth, creating jobs. That's what you want a government to do. But doing it is a different matter altogether. Yeah. But I do prefer that Labour seem to be campaigning on the economy, whereas the Conservatives seem to be campaigning on.
I've no idea.
I've no idea. I mean, it's very strange.
Well, that's the thing, isn't it? That's the thing. Keep it simple.
Rhetoric. It's populism.
Yeah. Do you know what? It's an excellent book out. Excellent book out. Everyone should read. Even stocks and shares, all that stuff. It's called The One Thing, I think it's called. But it's about focusing on the most important thing. So you focus on that. So let's say you got a list of 10 things to do, all right? And you think option paralysis, which one to do? Go through that list of 10, thinking, what is the most important thing on that list? Deal with that. Then you strike that off, and then you look for the next most important thing. Now, Labour, of course, their track record with the economy hasn't been very good. They've overborrowed and all that stuff. Well, there's been questions. The thing is, the reason why Conservatives won't vote for them, I suppose, is because of that. And so they've been very clever here, saying, we're going to focus on the economy. That's it. We are a party of the economy. We're not of unions and all that stuff. Forget that. That's all Labour. We are about the economy. And that's it. Focus on that. Whereas you're right there, Conservatives, you ask, what do they stand for now? It just seems like infighting, arguments. That's all they stand for. And that's no way to run a country.
Stopping boats. I mean, and again, they've obviously done some polling and found that, this is an issue that people care about. And they're trying to use, any means they can to kind of restore some semblance of respectability at the polls, because they're way behind. So yeah, I mean, it does seem like point scoring.
Yeah,
really, what I think everyone in this country wants to know more than anything else is when are we going to get back onto a sort of stable economic footing?
Yeah.
And therefore, I do think that Labour are right to focus on that. But as I say, I think delivering it is a very different ballgame altogether.
Yeah. Okay. AI Investor says Labour. Steve says Labour. Michael says the only thing that will grow with Labour is taxes to pay for more small boats, increased asylum, more public holidays and the like. But saying that, though, we are now the highest taxed economy, aren't we? UK is, the level of which has been seen since Second World War, apparently. So, Conservative of the low tax part, it's not panning out really well for them. So again, they've lost the let's look at the markets. By all means, let us know, Labour or Conservative, which party do you think is better for the economy? And by all means, give a reason.
I do think what's quite interesting is that, I think when we spoke last week, that not many people paid very much attention to the Chancellor's speech at the Conservative conference, but lots of people are paying attention to the Shadow Chancellor's speech.
Yeah,
and I think that tells you a lot about what people are thinking about.
Well, that's it. The thing is, where they've got themselves in a corner here, you've got Liz Truss, of course, a while back, messing up the whole economy and well, bonds prices are going mad. We're back above that price. But so what they had to show was stability. And Jeremy Hunt is an accountant, really. He's boring. He's robotic. I don't think he's a human. But yeah, he's not going to come up with any radical policies that'll change. And people do feel now, Conservatives, you've had a fair crack at the whip. Step back, let someone else have a go. Anyway, look at this. So these are the rise today. BAE Systems.
I think we know why this is.
This is of course the awful goings on in the Middle East over the weekend. And of course, oil is up a little bit because of this, because of the Middle East. BP and Shell rises there. You've got silver. Some of the fallers, it's of course the airlines. Down almost 5%. That's British Airways or in international consolidated airlines. Next is down. Ocada's there again, but yeah. So it
bounces around like a penny share, doesn't it? It's Croda didn't have they had some numbers out today, I think.
Oh, did they? Okay.
Yeah, third quarter numbers, obviously somewhat disappointing.
Okay,
but as I said, the industrial backdrop is not great.
Yeah. So look at that. The biggest riser and the most followed is Metro Bank. It's okay if you want to trade it. This is not a business that will survive.
It will survive. It'll
be by bailouts. It's not a thriving business. In fact, I was reading the article there. I think it was the ex-head of Citi and Barclays said this is a business. It's a temporary bailout, but the fact they're focusing on these very expensive branches is not going to work out. And when they first started, like you said, you took an account out with them because they offered higher interest rates on your accounts. But the thing is, the banks send their money from loaning, and they weren't doing a lot of that. They were just loaning. They were just giving people money. So it's a trader stock. By the way, AIM hit a new low today, down again. For that, down now 689. Let's have a look at Metro Bank's.
I mean, for me, a stock like Metro is completely uninvestable.
Yeah,
completely uninvestable.
Look at that. It's gone from like 3 billion market cap. So I don't know what it is at the moment, but it's what is it? We're talking 100 million. Obviously got extra 100 million on top of that, but this Colombian billionaire apparently is now the largest shareholder. He's bailing it out to a tune of 102 million pounds, I think.
But that won't last. Yeah. That won't keep off from the door for very long. There, I mean, my worry about small banks like this, where there are sort of financing worries, is that what do the customers do? I mean, if I was a customer, which I'm not anymore, I'd be dashing for the exit.
You would, yeah, and that's the trouble. When you get the headlines hitting, at 6 o'clock on BBC One or the news channels, people who are customers thinking, oh, they're in trouble. I'm going to pull my money out. But you are covered. What is it? 82 grand, I think it is. What is it? 80 grand?
So, I don't know. It used to be 75. The Financial Services Compensation Scheme. I can't remember what it is at the moment. But if it has gone up, it should have gone up in line with inflation. You would have thought, but whether it has or not is another question. I mean, the other. I did this not with banks, but when the energy companies, when all the sort of challenger energy companies were teetering on the brink, I think they probably had 2 grand sitting in, what was it? I can't remember which one it was now.
Was it Iceland?
No, the energy companies. Because they basically, you pay your direct debit and it built up a massive credit balance, which incidentally is in the news this weekend because a lot of energy companies are hanging on to very large customer deposits and doing, rather nicely out of them. But I got the money out as quickly as I could. Yeah. Got the money out as quickly as I could, and lo and behold, which one was it? It wasn't Octopus. I can't remember which one it was. It went bust.
Bulb.
It was Bulb.
Yeah. Octopus bought Bulb, didn't they, for an undisclosed amount, and apparently didn't say how much money. I think they got a bit of a steal.
Well, I had a right struggle getting that money out, though. A real struggle. Yeah.
Well, exactly. I don't think people are going to sit around now. People with money in Metro, I don't think they're going to sit around and wait for the Financial Conduct Authority to kick in if it does go wrong. They'll just pull their money out, and that will be a bigger problem.
Which is why I say for me, uninvestable. Trade it.
It's a trader's dream.
Not an investment.
Yeah, it's a trader's dream, but do you know what? Even traders will get it wrong. They'll catch the timing on that. It could, like I said, rise today, down tomorrow. So it's like it's a little 10 falling knives. You're going to try and catch one that bounces. There's look at that interesting level here on oil. Let's say there's $88 level. It's pretty much previous sort of resistance there. So it'd be interesting if it gets above that, and that's of course bouncing on the worries and the turmoil and the wars going on there in the Middle East. But look at that, John. Do you remember we said last week that companies often change their name to bury the past.
Yeah, and who's done it this time?
There's Cirata. People are following that. I've already forgotten who that is.
What is it?
Exactly. Exactly. It works. That's one disco.
It?
One disco, isn't it?
Oh, of course it is. I mean, I talked about it at the end of last week.
Well, exactly. And that's the way to do it. Look,
that's the way
confirmation
to do
of
it.
ticker change.
Right.
So that's be careful. I mean, slowly that will, as more news comes in here on Fox, that their confirmation of ticker change will go down to the bottom. You won't see that the first couple of scrolls. I think it's an interesting company. But even now, though, new contracts, right? I don't understand. I still don't understand the valuation of this company. They're literally less than 100 grand this contract is for. And I'm thinking,
less than
what's the valuation?
$1 million. Less than $1 million.
Less than $1 million. Yeah, less than $1 million, sorry. And they're still valued at 75 million. And I mean, and the revenue's not very big. I've never understood the valuation of one disco ever in my life. And I thought, I've looked at it several times and I'm missing something here. And I think they've always been that sort of hype sort of story to it. Oh, the next big contract that could be massive. I never understood it.
It's funny because you go back to 2019, their turnover was 16 million, and then fast forward a couple of years, and you're down to 7. So that alone is sort of telling me where's the growth? It bounced back to just under 10 in 2022, and then the forecasts, well, they're non-existent on Sharepad.
Yeah. Well, I mean, the thing is, would you put a forecast out there in the market, knowing what happened previously?
No.
Macman, neither, he says, Labour or Conservative, all just tell lies. They do. I mean, that's the old gag, isn't it? How can you tell a politician's lying? His mouth is moving.
I mean, I kind of agree with that. It would be nice to have some different options, but we don't, unfortunately.
No. Informer, we need a government that's prepared to take risk. Neither party's in the game for long-term risk. No, I do find they are. That's the trouble, you see. I don't know how you do it, but a lot of them do take decisions based on the elections, which now with Sunak, it's hugely coincidental, isn't it? How you change a lot of policies to suit sort of traditional conservative voters, 6 to 12 months before an election.
I actually don't understand how they can make those changes. I can only guess that the manifesto has been ripped up, which to my mind would mean going back to the electorate. But there is a very short-termist outlook in politics, driven by just simply the desire to win elections, rather than do right by the country. And I think that's what needs to change. And we definitely don't see it in the Conservative Party. And personally, I'd be prepared to give Labour a chance to see whether they can put the country first rather than the party. Yeah.
As long as they don't start clamping down on things like. In this day and age, right, this tax is going up so much, so everywhere. You tax whatever you do. You can't even leave the house. You put petrol in your car is taxed. Car tax is taxed. The money you earn is taxed. You buy a house, capital gains tax, stamp duty, everything's taxed. Everything. There's got to be some area where you can. Yeah, you've got to be somewhere where you make some headway. And I do think like the ISAs being tax-free is a good idea. And as long as you start clamping down on that as well, taxing that, it's in no safe haven. There's no area, a little bit of area, you can put some money aside, but it's tax-free in some way,
that said, the lifetime pensions allowance has steadily been eroded over recent years throughout the period of Conservative rule. Whereas in fact, in an inflationary environment, you would expect it to go the other way. So they haven't supported the markets. They haven't supported growth. They haven't supported the right for people to invest their money and reap the rewards of that.
Yeah, I do think that investment about ISAs, if you invest in British companies, I quite like that, British listed companies, that it'll be tax free, because that does boost the economy. And of course, it's very high risk start of companies, but I mean, for every one that does really well, it employs lots of people, so that's an incentive. P6 Jedi says, don't forget the umbrellas. That's with Metro. Yeah, they should go back to that, I think. That would, a lot of money inflow would happen there. Big RNS came up from Metro. We're now relaunching free umbrellas for new accounts. That would bring people in. 85k, actually, is the covered amount. Chris says, party politics is dead. Short-termism to remain in power, not long-term strategic planning. Yeah.
100%.
Phil says, I think with all this politics talk, we need a nice glass of English sparkling wine. Don't tell me, Phil, you've invested in
Chapel Down and Gusbourne.
Chapel Down, yeah, exactly.
Lovely company.
Okay, let's go to some covered on the front page. I've done a couple of podcast today. Eden Research, interesting area. They are in sort of biopesticides, so environmentally friendly pesticides that get rid of birds, but also protect the things. And in fact, what Sean said, the CEO, stuck with me. He said the world isn't getting any bigger, but population is. So we have to be more sustainable in the way we do things. And so they've raised about it's good in this market, 9.9 million they raise, and they're only a 26 million market cap. But so worth a look there.
Agriculture, I like agricultural technology. You know, there's sort of as Sean there says, you know, the population is getting bigger. You know, there's more mouths to feed, but also the environmental demands are getting tighter. So. You know, it's becoming all the more important that farmers can farm in an environmentally friendly way. So companies like Eden Research are really important in that. You know, we spoke about light sciences last week, light science technology, which is obviously doing the controlled environment agriculture. You know, we regularly speak to Eneraqua, who do sort of irrigation control in India. You know, again, very important, water management. So you know, lots of really good companies doing good stuff with ag tech. We're doing a sector piece on it at the moment. Lauren's writing a sector piece, so hopefully that'll be out the next week or so.
Yeah, I do think about sustainability a lot, especially when I'm doing the bins of a week. I'm taking the bins out and thinking, we're just a family of 4. And we throw so much rubbish out. And then you multiply that across our street, then across the county, then across all of England, Wales, Scotland, Ireland, across the world. How much stuff is being thrown out? And you think it's amazing. Where does all this waste go? It's nuts.
Landfill.
I mean, yeah, exactly. It's bad, isn't it? But just extrapolating that number out is scary. So
well, I mean, again, and these are long projects, but waste to energy is a big thing. Obviously recycling and reusable packaging is a big thing, which is why I'm always slightly concerned about packages. We can no longer just ship our rubbish around the world. China have essentially banned it, and I suspect other countries which we then subsequently shipped it to will follow suit. I think it's a big growth industry.
Yeah, and what I would say is when a company raises money, it's always worth. I always keep an eye on companies who raise money. One of the things, I mean, I do look for risers on good news, but generally I also look at companies that raise money, a decent chunk as well, because what you need to do then is look: is this a good business going forward? Do they have enough money now to get to profitability? Is it in a growing area, which this is? And so it's always worth looking at companies who raise a decent chunk of money, have loss making, but if that money can get them the profitability. So, because then the biggest risk of any small company that's new or growing or whatever is cash. Once you've got that locked down, that cash, and you've got a good runway, then you can do some decent research in it, and then that big risk is removed. Then So
did it even say what they're planning to do with the cash? Did they
basically expand their products and portfolio, go to bigger markets. So so essentially, he said it'll accelerate our commercialization of our products and all that stuff.
So presumably accelerating that path to profits, because they're still based on the forecast I'm looking at. They're still going to be loss making in 2024, just about touching EBITDA break even at that point. So hopefully, that decent fundraise accelerates that. Yeah.
And another interesting one, it's not listed yet, but this is quite good, and they've sussed it. In this country, we've been dragging our feet on green hydrogen production. This is the company here that's got it sussed in Australia, but they've just about to list via a reversed, a special purpose acquisition company, SPAC. NZI is the company that's listed, but they're reversing into that, and it's worth looking into that. And he said we'll be profitable. And he did mention I think, wow, really? And so they've got the model sussed, and he's from a mining background. He put lots of money into it himself. He's a founder, and this is Brennan James. But worth looking at that, because a company that's profitable on hydrogen production is very rare. Very rare indeed. It's this future energy, but as yet it's costing most companies a lot of money who are in this area. So the fact that they have a line of sight to profitability, obviously this has to be seen to be believed, but it's worth doing some research on that area.
Worth a look.
Narf.
It's cybersecurity.
Okay.
High end. So I've not looked at it much before, to be honest, either. So I thought I'd have a little peek this morning. It's one of the big contracts in the US to help protect electronic patient records against malware. And these contracts, they're government funded contracts.
The government's got the money there in America, haven't they?
Well, they'll never run out of money. They just
sort of. They do it a couple of times a year, or once a year at least, don't they? They almost run out of money. They say, "Okay, raise the debt ceiling to now 34 trillion."
Yeah, I just, cybersecurity's got. I mean, it's obviously a massive area. There was all sorts of, dark actors, dark forces at work in the cyber world. Lots of very sensitive information out there, and the US government's the kind of customer you want if you're a cybersecurity provider. Now, this is a fairly chunky contract. The shares were suspended, and they've just come back from trading. There was a few accounting issues, which they appear to have resolved. But yeah, it's going to do 5 or so million this year. Yeah, so there's 5.8 million in revenue. So if it moves into positive territory, it's a good sign. Cash at 1.85. Okay. Yeah, and so not a lot of cash. I mean, but not, it's not disappearing fast, as you can see from those two figures there. But more, more importantly, it's on the cusp of profitability, and this is, as I say, I think cybersecurity. Yeah, we are living in a very fragile world at the moment, and I think it's going to be a growth area, even though there have been stumbles. Certainly, one of the UK listed cybersecurity companies. Dark Trace was the one that's been. Harland and Wolff is one of the most read, by the way. But we'll get into that in a bit. But Chill Brands, I never understand this company, to be honest. They did a vape sale to major retailer. They do nicotine-free vapes, but I'm thinking initial 150 of the 1,700 stores. But I think it's risen today. Like they're going to be the only vape brand in WH Smith. Have you seen behind the people who serve you the amount of vapes? That's all it is these days, isn't it? In these sort of little shops, there's so many vapes available. Yeah. There's so much competition in that area. It's like, to me, when you look in this area, do they have something special, or do they have a monopoly? I don't believe they do. So no, it has been hammered. But Supreme seems to have the brands the go-to brands in vaping. That's Elf Bar, I think. Elf Bar, and there's another one. Yeah. I can't remember. So that's just another. So anyway, Harland and Wolff, what's happening here? They're launching ferries. What? So they're basically, Harland Wolff is a shipbuilder. Yeah. But what they've decided is, when it comes to the provision of ferries to the Scilly Isles, it's a massively underserved market, and they're better off cutting out the middleman, building the ships themselves, and operating them. Wow, that's a bold move, isn't it? It is a bold move. Yeah. It is a bold move. So yeah, it's. I mean, I don't really, fully understand the economics of it. I have to have a look further, but yeah, it's. I didn't realise it was such a popular tourist destination, but apparently it is. So Isle of Scilly's. I mean, I don't know. Yeah, off the coast of Cornwall. But yeah, so they're growing it. I mean, it's just another string to Harland Wolff's bow. And I mean, they've still got this 100 million revenue target. There are a lot of things going on at this company. Yeah, and this is another new area, and a somewhat interesting one. A lot of ferry operators have pulled back from the market. So there is a gap, and they're trying to fill it. In fact, they've struck them down through that almost a bit of support there at 12.5 pence, but it broke down the gap down, went back up, come back down again. So the chart is not looking convincing yet. But anyway, what else is there? Equipmake. I mean, just going back to hydrogen. I like this company. We spoke about them last week. Equipmake, didn't you? I really do, yeah. But I think it's such an important area, and it's electrification of heavy vehicles. Buses is their main thing. And that's what's really driving the growth of this business, the shift to commercial revenues. They're investing lots in their factory up in Snetterton, Norfolk, to really underpin the delivery of what is a really quite quickly growing order book, particularly on the sort of bus transformation, the bus electrification. That they call it repower. But this is a deal with a subsidiary of Caterpillar. Been awarded a contract by the Advanced Propulsion Centre in the UK to develop basically drivetrains for heavy industry, heavy construction vehicles. Advanced Propulsion Centre. Wow. Yeah. So I think what's interesting here to me. I mean, it's a long project. It's going to take nearly 3 or 4 years before a demonstrator becomes available. But this is a huge market. Caterpillar is a giant as well. It sells about $60 billion worth of gear every year, and it's it's a fantastic endorsement of Equipmake's capabilities. Fantastic endorsement.
Yeah, yeah. So Horizonte is being followed again. I'm just looking at the companies being followed there. Cornish Metals. What are they doing?
I haven't really looked at it much.
Yeah, they've got a sort of well, they're saying here. What do they say? We expected the mineralization at South Crofty. This is the potential tin mine, South Crofty, to respond well to X-ray transmission ore sorting. But these results exceed even our most optimistic expectations. There we are. So Richard Williams there is very bullish on that. But they've done some, test work, and they're saying so far so good. Looking very good. Tin mine in Cornwall. So of course, very famous for tin mines. But that's a CUSN. It's like most commodity plays. It's having a tough time of late.
But it is in the sweet spot of UK critical metal strategy.
Yeah.
So yeah, it's but again, getting mines into production is always a challenge.
It's tough, yes. Some have fallen today. Mine Gym, Starcom, by the way.
Yeah,
I never understand Starcom, by the way. They often put out contracts with massive potential, and they never really, come to fruition when they post their financial results. So they tend to rally, but they are sort of Israeli based, so that's why they're down.
Yeah,
yeah.
We've had a few statements on that. Batman BATM, Israeli company, got some operations there. So it shouldn't be affected, but it's really, really quite horrendous what's happening there. Mine Gym, just going back to Mine Gym, this is fascinating because this is basically a result of what looks like the sort of economic slowdown trickling through the economy. So they said they've basically seen clients this is sort of employee training type stuff, basically restructuring and therefore putting spend on these things on hold. So that sort of gives you the feeling that this stuff is somewhat discretionary.
Yeah, well, look at this. Exactly. So it's supposed to be at the in this day and age, mind, body, and soul together. Hooked in with your cultural, shape, business-wise, and sort of in cahoots with that. But so the company delivers business improvement solutions using scalable proprietary products which are based on behavioral science. So it is one of those areas, even though you think now it should be at the forefront, maybe. Yeah, you're right. It seems like it's discretionary when it comes to it, and the economy start to get hard and generating revenues hard. What will people sack off as far as costs are concerned? Advertising can be one sometimes, and marketing, and also this kind of stuff to improve the well-being of your
Well, it's not just well-being. It's performance as well.
Oh, okay.
So. But it's all wrapped up in this. I mean, it's a very decent company, and it's
I did that. They're on my watch list for a while. I've looked at them. I mean, do you know? I took a hit during COVID because a lot of it was face-to-face stuff, and then COVID came, like I said there, and where was it? 2020, and they did sort of a bit of a knock.
Well,
and then they repositioned to be on Zoom and all that stuff, or whatever, remotely. But they said it hasn't really happened for them. Look at this;
it's not bounced back. So go back to 2020. And their year end was March, so they escaped.
Yeah.
Really, the worst of it in that financial year, and they delivered 7.5 million pre-tax profits on 48 million turnover. So really very very nice indeed. Since then they've had 2 years of losses, and then they're sort of back up to 3 million profit on 55 million turnover. So it's really struggling to find their feet again. Really struggling.
Yeah.
The forecast were for to kind of get back to 7 million profit next year, but this doesn't look like it's going to happen.
Yeah.
And ironically, having pointed to their clients restructuring to save money and affecting their contracts, they're restructuring as well. There you go. Reducing cost base.
They give advice on that, but thing is, they say some of their clients are bigger. I'd be surprised if the bigger ones are pulling contracts, or maybe just smaller ones. But like I said,
but we know that. But even no one has been immune. We know that a lot of the big tech companies over in the US were shedding jobs. Nobody's immune. Nobody can run their business with fat at a time when things are getting tougher.
Yeah.
So a lot of companies will be looking to take costs out, and unfortunately, Mine Gym seems to be on the end of that.
Yeah, have you looked at anything else here? I mean, Graft Polymers and that, they're rising.
It's so small. I did have a peek, and you know, it's
a pivotal agreement here to just chat about. This is it. Look, to explore scope for addressing electromagnetic wave pollution with potential economic impact to electronics industry. Okay.
Yeah.
And I think, okay, where's the money then? There's no numbers in there. So
yeah, I mean, it's a
little
tiny
bit
company.
Tiny
company.
Concerning. Yeah, because they got cash. I think it was like cash of, as of the 30th of June, 520,000. Okay, well, that's so good. And the operating losses is that pretty much. So yeah. So yeah, but the only thing is rising today significantly, I said, is the trade plays, trading stocks really.
It's a really tough market. It's horrendous.
Unless have anyone seen it? I mean, do you know what? Phil jumped in here. Stocks I've yet to research properly. SCS, no debt. Well, they haven't got debt, but they
delayed their
have
accounts. They've delayed their accounts, haven't they? What? I didn't. I only saw the headline. What's that all about?
Well, it's probably the same old thing, is it? Or let's have a look. But they haven't got debt. But like everything, be aware in this day and age of lease liability. You know, they've got a lot of stores, so they did say. But they got cash of the preparation process is substantially complete, but the board did it. Short delays required for finalisation. Yeah, okay.
Got away with that. No one likes to see an accounts delay, but actually, what they've done is taken the opportunity to reiterate their forecast. So well done to them.
SCS Samsung's design licensing okay, but revenue down. Yeah, Zotefoam signed a contract with Nike again, from what I hear. Watkins Jones. By the way, one of the fallers today was Hargreaves Lansdown. So you were thinking of getting into them, because I know Phil took a position in those. But I know you think of getting into them, John. But they're down today. So
yeah, I haven't. As I said, I'm sort of nervously sitting here wanting to deploy, but I just think there's so much uncertainty out there still. I'm nervous. So yeah, Hargreaves, I do think it's unbelievably cheap, but where's the catalyst? I can't see many catalysts for that at the moment, but lots of catalysts for that. Which, not just with Hargreaves, but across the board.
Yeah, just very odd. One of the stocks I hold, right? And when a volume ticks up massively on no news, you think, what's going on there? And in fact, it was good energy today. And I thought, what's going on? Because look at that average daily volume here, and this is handy on Vox, by the way. It's worth looking at that. It's 33,000 today. Than 117,000. There's no news. I think, what's that about? What is that? And you go into trades, think there's a lot of blue there. And at the start of the morning, you had quite a look at that. I thought, what's going on? There's been no news out, is there? Well, I don't know if there has, but that's odd when that happens. If anyone knows of any news about that, then it's worth looking at. So Sareum, I don't know anything about Sareum, do you?
It's a biotech. It's autoimmune diseases it's looking at, and the one it's going after is psoriasis, which is a surprisingly common skin complaint. Not very nice. So yeah, it's looking positive. On the sort of trial data front there, and I hope so, because I know several people are affected by this, and it's not very nice.
Do you know what's telling is that I've not looked at a chart today that's showing an uptrend. They're all showing downtrends. It's like, that's the state of the market, isn't it? When every chart you're looking at, the opposite of we are in a bear market, of course, but I mean, every chart we've looked at this morning is not looking good. Anything else here? No, Impax. In fact, Impax asset management.
It's such a good. It's a good fund manager. Fund management group. They've got some really wonderful funds. Impax Environmental. Markets being the main one, but yeah, they're struggling to attract assets.
Yeah, but this is the thing, that this is why the market is what it is. They say here, Ian Sims says investment conditions continue to remain challenging during the final quarter of the financial year. It's down, decrease of 5.8 assets under management. When moderate redemptions from several of our distribution partners compounded market-driven falls. So you've got a vicious circle going on here.
Whammy.
Yeah. The share prices go down. People start selling. They have to sell themselves, and that's why you see. That's why trends are very important, because selling begets selling, and buying begets buying, pretty much. And so once you see the market turn, everything tends to rise. The entire tide goes up. Right now, the tide is going down, is going out. And like I said, look at the AIM share. It's now.
Just in respect of Impax, invest in companies that are, basically creating solutions for, environmental protection,
Yeah.
to really sort of make the world a cleaner place. But they've been caught up in selling around ESG. So ESG was sort of treated as a bit of a, people have got a bit suspicious of it, that it was just a box ticking exercise. And then, of course, you've had the energy crisis, which has meant, that oil has been back in demand, back in fashion. And so this sort of double whammy has meant that companies like Impax are seeing outflows. It's just gone out of fashion at the moment.
Yeah. Phil says, I got a small position, drip feed. Don't drip feed in a bear market. Don't. Honestly, you'll be sitting in a pit loss, it'll hurt. Just wait for an uptrend. Why don't you just wait for an uptrend? Wait for it to break new highs and then invest more.
I will. So Impax is on my radar, and as I say, I think this will have to turn at some point.
Like I said, you can average down in a bull market. It's fine because they're dips. In a bear market, they're not. They're downtrends. They last a lot longer. And they're not more painful. And that's my position. I mean, I've been sitting on it, like I say, 30% cash for a long time, and I'm not. I'm not going to put any more to work until I can see the trend change. In fact, this is quite telling, John. Have you seen this? I had this. I saw this on Reuters today. UK pension funds rush to ditch unlisted assets as regulators question valuation. So UK pension funds are rushing to sell unlisted assets, often at a discount, because they're overexposed to the opaque $12 trillion global private market as regulators question the true value of investments spanning property to private equity. And this is because they're raising the alarm, but the value of so-called private market assets, including big infrastructure projects, the paper worth of which has yet to be adjusted downwards, while listed markets, such as bonds, have suffered an historic rout due to higher borrowing costs. And they've seen that. I mean, a while back, people were saying the private markets haven't taken a bit of a hitting, really. They haven't, but the public markets have.
They really have.
They're starting to. I mean, it may be in delay, because the stocks are very liquid, because you can buy and sell straight away. Private companies aren't like that, so they may take a while to.
No. I mean, there is a public face of private markets, and that would be the easiest place to see that is in the investment trust world, where there is a very large private equity sector, and they've been selling off for quite a while. And you're seeing, you remember I said there's a difference between the share price of an investment trust and the value of its assets. So the value of the share price of private equity trusts is trading a significant discount to the stated value of assets in anticipation of there having to be write-downs in the value of those assets. So you're seeing, what's the worst one on here? JZ Capital Partners is trading at a 49% discount. It shares at a 49% discount to stated assets. Aberdeen Private Equity Opportunities at 43% discount. Harbour Vest Global Private Equity at 44% discount. So that the market is anticipating that there will be write-downs in the value of privately held assets. But actually, I think what's happening in private equity is they're not all the same. And whereas there is a belief that a lot of private assets were written up, the value was written up unrealistically. Actually, a lot of investment companies did not do that. So they're being sold off, even though the actual valuations on their books are actually quite moderate. One that springs to mind is Oakley Capital Investments, who I spoke to for Vox a while back. They're trading at 35% discount. So it's a tricky sector at the moment, just because of nervousness. But I think what you're going to see is the baby being thrown out with the bathwater here. I think there's going to be some great opportunities in private equity. Because of those discounts.
But I mean, this is like I said, this is the signs of a bear market, isn't it? I mean, if the stocks we've looked at, right, the amount of stocks we've looked at that have literally listed in the bull market, top the bull market. And now, when IPOs, like money was flush, everyone was investing in any old thing. Like I said, go back to that standard example of celebrities chucking millions into NFTs. Money was a wash. Everything was cheap. And now IPOs were coming to the market, 10 to the dozen in the US. And now it's literally dried up in UK. There's very little IPOs happening. And that is the state of a bull market.
Yeah, it's really tough. I think we might have one coming this week, but I'm going to not mention it until hopefully an IPO, but I'm going to keep quiet.
I'd like to have
it doesn't happen.
I'd like you to announce that one day. Oh, by the way, we've got a bull market starting this week. Okay, so started. Thursday will be starting at 9:30. All right, that's the bull market.
Just going back to that point about unlisted assets, it's hugely problematic because it also means, we talk about infrastructure. Sort of renewable energy infrastructure. A lot of that is privately held through either private vehicles or publicly listed vehicles. But the inflation, they are very sensitive to interest rates. Their sort of valuations are based on the value of their cash flows over their lifetime, and nobody knows what the value of those the value of those cash flows in an inflationary environment is substantially reduced. And we're seeing massive projects cancelled, massive projects. Big wind farm off Norfolk has been cancelled. Yeah, really quite serious stuff. It's this is why, going back to what we spoke about right at the beginning, building infrastructure needs private money. It needs capital from the markets, and in an environment like this, it's very difficult to attract that capital. So saying you're going to build infrastructure and doing it, again, two very different things. Yeah. Well, I'll leave you on that happy chart there, which is the AIM All Share Index. We're literally now almost 48%. Well, we make 50% down from the high that's 763 days ago. It's hard. It's hard. It's one of the hardest bear markets I've ever been in. In fact, it is the hardest I've ever been involved with, because in previous bear markets, I haven't really been this invested, as much as I am now. But I mean, so all this involved, so this is the hardest one I've ever been involved in. But once it turns, John, and it will turn, it'll turn in 2024. We'll have a massive bull run. Everything's just a washout. So it'll happen. Don't worry. The markets always come back. So that's why you have to preserve some capital, ladies and gentlemen, to take advantage of that upswing when the tide changes. Don't forget, if you can, hit that like and subscribe button on our and don't forget, download the free Vox Markets app. Like I said, it's free, but it's worth so much money to you. Unbelievable. John, cheers for that. Speak to you tomorrow. Bye. Speak tomorrow. See you later.